Imagine a corporation today, like Google, Apple, or Amazon. Now, imagine if that corporation had the legal right to execute people, mint its own currency, and command a private army twice the size of the British military. This isn't dystopian fiction. This was the reality of the year 1600. The British East India Company was not a country. It was a ruthless profit machine that ruled over hundreds of millions of people. It was the first true multinational corporation, and it wrote the playbook for modern global capitalism in blood. The story begins in London, not with conquest, but with a desperate financial innovation. In 1600, trading with the East was deadly. Ships sank, pirates attacked, and diseases killed crews. No single merchant could bear the risk. So, they invented something that would change the world forever: the joint stock company. For the first time, investors could pool their money to share the risk and the profits. They received a piece of paper called a share. This wasn't just a business deal, it was the birth of the modern stock market. But this financial innovation soon turned into a weapon. For the first century, they were just traders, begging Indian emperors for permission to build factories. But the company realized a dark truth: monopoly is far more profitable than competition, and the easiest way to secure a monopoly is through violence. The turning point came in 1757 at the Battle of Plassey. The company's leader, Robert Clive, a sociopathic genius of finance and war, defeated the ruler of Bengal. But he didn't win just by fighting, he won by bribing the enemy general with a promise of power. This corporate takeover handed the company control over Bengal, the richest province in India. Suddenly, a board of directors in London was collecting taxes from millions of Indian subjects. This is where the story turns truly horrific. In 1770, a drought struck Bengal. In a normal empire, a ruler might lower taxes to help the starving peasants. But the East India Company was not a government, it was a corporation beholden only to its shareholders. To maintain their profit margins during the drought, they actually increased the tax rate. They forbade the hoarding of rice, forcing farmers to sell their food for export while their families starved. The result was the Great Bengal Famine. An estimated 10 million people died, 1/3 of the population. And yet, in that same year, the company reported record profits and its stock price in London soared. It was the ultimate proof that for the company, human life was just an entry on a balance sheet. As the years passed, the company faced a new problem. They were buying millions of pounds of tea from China. But China didn't want British goods. The company was bleeding silver. They needed a product the Chinese couldn't refuse. They found it in opium. The company began forcing Indian farmers to stop growing food and start growing poppy. They then processed this opium and smuggled it into China on an industrial scale. It was a state-sponsored drug cartel. They deliberately created a nation of addicts to fix a trade deficit. When the Chinese emperor tried to stop the flow of drugs, the company didn't hire lawyers, they used their influence to launch the Opium Wars. They used modern gunboats to bombard Chinese cities until the government surrendered, forcing them to legalize the drug. They bombarded a civilization to keep their supply chain open. By the 1800s, the company's power was absolute. They had a private army of 260,000 men, twice the size of the British Royal Army. They employed a massive bureaucracy of civil servants. But the rot was spreading from within. The Indian soldiers, known as sepoys, were treated with increasing disrespect and racial arrogance. In 1857, the breaking point arrived. A rumor spread that their rifle cartridges were greased with animal fat, violating their religious beliefs. The ensuing Indian rebellion was violent and bloody, shaking the company to its core. The rebellion failed, but it was the death knell for the company. The British government, horrified by the scale of the violence and the mismanagement, finally stepped in. In 1858, the Crown nationalized the company's assets and took direct control of India. The corporation was dissolved, but its ghost remains. The British East India Company was the pioneer of the world we live in today. They invented the shareholder, the corporate lobbyist, and the concept of too big to fail. They showed the world the incredible power of global trade. But they also left a permanent warning that when the pursuit of profit is detached from morality, and when a corporation becomes more powerful than the state, the result is not just business, it is tyranny.